Are you struggling with the forex market? Do you find it difficult to become consistently profitable in the market? Do you really want to make some good bucks out of the market like this? Then you need to stay with me till the end of this video, because in this episode I'm going to be showing you the structural traps in the market that you need to avoid. Now, if that sounds like something you want to learn today, then you need to be with me just immediately after this very short intro. Hello and welcome back. In today's episode, we want to look at what I call structural traps in the market. Now, I want to teach you a very unique concept about structure that you need to know. Structure is everything in the market. Structure and liquidity is everything in the market. Okay? Without a proper understanding of these two concepts, you won't be able to make consistent profitability in the market. So in today's episode, I want you to stay with me and mark every word that I say here. Structural traps. Now, let me begin by showing you on a whiteboard what I mean by structural traps. How the smart money traps the retail traders. Now, take a look. Now, take a look at that. This is an uptrend. Okay? This is clearly an uptrend. Now, for the retail mindset, this to them is a break of structure. Okay? That's a break of structure. And price from this high. But before you know it, price now started coming down. Okay? As price was coming down, they are looking at these points as their break of structure. Okay, they look at there as break of structure. The next point they look at as break of structure is here. They look at this point as break of structure. Okay, and therefore to them, when price has broken this structure and broken this one to the downside, it therefore means that this uptrend has changed, and therefore we are now in a bearish structure. All right, because the smart money teaches that after every break of structure, there is going to be an OP. All right, that is what they tell you in the books. But does it actually work that way? No, it doesn't. It doesn't actually work that way. This is the retail concept about structures in the market. But in today's episode, I want to show you the real structures of the market and the structural traps that you need to avoid. All right, very, very important that you need to avoid them. Okay, so let me delete some of these things so that it will be easier for me to show you what I want to show to you. Now, actually, our students at our VIP community understand how to map structure correctly. Now, let me say this, that this is not your structure, guys. Let me show it to you. This point is not a high. It's not actually a true high. And because price has taken out this high does not mean that this is a bust, a break of structure. No, it is not a break of structure, guys. All right, this is a retail high, and you need to understand that very, very well. Now, for a high to be confirmed as a valid high, it has to take out the first internal structure low, okay? Or in the case of a downtrend, for a low to be regarded as a valid low, it has to take out the first internal structure high. And I'm going to show you in this very episode. All right, so this is not a high, and therefore there is no break of structure here. Okay, now if you look at this, can we say this is a true high? Take a look at it. Is it a true high? Now I'm going to tell you, I'm going to explain to you why it is a true high. This becomes your true high in the market, guys. All right, why is that your true high? It is because now this high sponsored the move down that took out the structure low here. All right, it took out this structure low here. This is very, very important for you to understand. It took out this first internal structure low. All right, if you like, that is the first pullback. It took it out. All right, once this structure low, the first internal structure low has been taken out, it means that this high has been confirmed as a valid high. So this high now becomes your high probability. This high becomes your major structure high. This is your major swing high, guys. I want you to understand that this is your major swing high, and you need to regard that as a major swing high. And therefore, if price now breaks and closes above this high, it becomes a boss. All right, this is your valid break of structure, not this one. This is not your valid break of structure. All right, but the fact that price has closed above it does not make it a valid break of structure. Why? Because this high is a retail high. It's not the high that the banks look at. I want you to pay attention. Okay, this is a mentorship content, but I'm just going to share with you for free, and therefore you need to pay great attention. All right, now this is your high. This is a major high. Now, for your major low to be confirmed as a valid low, it has to first go back up and take out this major high and close above it. All right, once it closes above this major high, this your low is confirmed. Okay, and therefore, as you can see, price went back up, took out this major high, and that tells you that this is confirmed as a major low. All right, I want you to understand that has been confirmed as a major low, okay, in the market. So this is your major high, this is your major low. Why is this your major low? It has gone back up to take out this major structure high here. Okay, so now instead of for traders to mark out their major structural points in the market, they go ahead to mark out their internal structures, which has been misleading a lot of traders in the market, and that has led them to be losing their accounts in the market. For instance, let me show that to you guys. Look at this. A lot of guys, when they see this is a high, now price came back down and went back up and then took out this low here, they regard this as a break of structure. Okay, they regard that as a break of structure, whereas actually that is not a true break of structure. All right, so they regard that as a break of structure. Now the books tell you that after every break of structure there is going to be a valid OB, isn't it? Now price has taken this structure out, so what they naturally will do, the retail traders will be to look for an OB that is sitting around here. All right, and if you look at it, there is no price that came to that OB. All right, at most they will be waiting for that OB, and then look at what will happen. Price will just blow through their OB. Okay, because they didn't understand that this, what they mark here as a break of structure, is not actually a break of structure. I want you to understand that very well. Okay, now as price went again down, all right, okay, they saw this again as a break of structure, and this is very, very important for us to understand. This is not a break of structure, guys. This is not a break of structure. When they see that again, they mark that as a boss. That price has taken out structure from there. Okay, now immediately they mark that as a boss, because the books tell you after every break of structure there's going to be an OB, and therefore they identify their OB here as their valid OB. And look at what happens. Price now goes back up, take out that their OB, and then continue higher to go and break this major structure high here. Now, what happened here is just exactly what I have told you. It is that you need to understand where your major structure points are and where you have internal structures. Okay? Now, I'm not going to bother you with a lot of theories here or a lot of concepts here, but I want you to know that this I is your external liquidity. It's your external range liquidity. I want you to understand that. And therefore, your expectational order flow is for price to come and take out this external range liquidity and continue going higher. All right? Your duty as a trader is not to begin to capitalize on every internal structure that you see. All right? I want you to understand that. The internal structures do not immediately change the major structure of the market. I want you to understand that. Okay? Now, after taking out this structure high here, price formed another higher high. All right? I'm trying as much as possible to make you understand this thing. All right? This is a higher high. Why is it a higher high? Why is this a valid high? It is a valid high because the first internal structure low has been taken out, which is this. This is your first internal structure low before the higher high. I want you to understand that. This is the first internal structure low before this higher high. All right? And price came back down and took out that first internal structure low. Can you see that? Cementing this high as a valid high. Okay? And therefore, this high now becomes your major structure high, your major swing high. This high here is your major swing high. I want you to understand these things, guys. This is your major swing high. And therefore, if price comes back up to take it out, it becomes a break of structure. And as you can see, all right, it has come back up to take out that structure high, that major structure high. All right. Now, that is the way to identify your high. And your low is the deepest low, all right, that went up again to take out this major structure high. All right. The deepest low. And where is the deepest low here? Well, the deepest low is this low here, guys. As you can see, this is the deepest low. And therefore, as you can see, this low sponsored this move that took out and close above the major structure high. Can you see that? Now, a lot of guys will look at this as a break of structure. They will look at this as a break of structure. All right? Now, because the books tell you after every break of structure, all right, there is an OB. And so, they will place a pending order somewhere around here and said that is their OB. Okay? They will place their pending order here because they feel that is the OB. All right? But price wouldn't respect their OB most of the time. 70 to 80% of the time, price will not respect their OB. Why is it? Because their OB is sitting on liquidity, and therefore, what price will have to do is to come back down, take them out of the market, all right? Take out the liquidity resting below this low before now going higher, all right? I hope you understand what I'm trying to explain now. Please take note of that. What you are to do, all right, as a trader is to target the major structure points in the market. Major structure high, major structure low, major structure high, major structure low. All right. Now, in this case, you are bullish, and therefore you want to see price breaking the major structure high. All right, because your expectational order flow is for price to go back up and break the major structural highs. All right. So do not fall for these structural traps in between your major structure high and your major structure low. All right. Please do not be induced by these structural traps here. These internal structures are the structural traps that the smart money is using to induce traders to go the wrong direction. I want you to understand that very, very well. Okay? Now, that is about the uptrend. It is exactly the same thing with the downtrend, but let me quickly show you that of the downtrend so that you can understand. Now, take a look at this. Okay, so look at this now, guys. Take a look at this. This is the downtrend version of what I just showed you now. Now, remember, the books tell retail traders that every break of structure will have an OB after that break of structure. And so therefore, the retail trader will mark this as a break of structure. And because this is a break of structure to them, they will now look for an OB that is sitting somewhere, either here or wherever. All right? They look for an OB there. And look at what happened. What happened? Why did price not respect the OB? Because this is a break of structure according to the retail mindset. Why did price not respect this OB? Well, price couldn't respect this OB because number one, this was not an actual break of structure. All right? I've told you, for your low in a downtrend to be confirmed as a valid low, it has to take out the first internal structure high. And as you can see here, this low didn't produce any move that took out any structure high. This is the first structure high, and price didn't go back up there to take it out. And therefore, this low is null and void. This is not an actual low. All right? I want you to understand that. That's not a low. But that is a retail low, nevertheless. But it is not the low that the banks look at. That's not a break of structure. I want you to understand that. Now, that's why this OB here failed. I want you to understand that. Now, let me take out that OB. Now, the next point where we can see is that there is a low here. Now, is this a valid low, guys? From what I told you, that your low, your valid low is a low that sponsors the move that takes out the first internal structure high in the case of a downtrend. Now, if we say this is a valid low, all right, let me indicate it. If this is a valid low, where is the internal structure high that it has taken out? Here. This is internal structure high here, guys. As you can see, this high is the first pullback. As you can see, this is your first pullback, and price went back up. All right, this low sponsored this move up that took out this first internal structure high here, making this low to be a confirmed low. I want you to understand that, guys. This is a confirmed low, and therefore, if price now comes back down to take out this structure low here, this major structure low, if price comes down to take out that major structure low, that becomes your valid boss. It becomes your valid break of structure. All right? It becomes your valid break of structure. Now, a lot of guys will look at this move here and begin to look at it. That here, there is a break of structure here. Here. They regard it as a break of structure. And after every break of structure, what do you expect? You expect to see an OB, isn't it? You expect to see an OB. And therefore, what will they do? They will mark their OB here because price has taken out this structure. Now, they will mark their OB here. Okay, so they mark their OB here. And price now came back down and tap on this retail OB. And then go back up momentarily. Before you know it, price came down. Why did this happen? Why did it happen? It is because the retail traders is yet to understand where their major structure points are in the market. You don't go about marking everything that you see on the chart as a break of structure. You need to be able to identify your major structure points and your internal structures. I need you to understand that very well. So that's why this OB here failed. All right? It failed because they did not follow their major structures. Now, this is our major structure low. I've told you why it is a major structure low. It is because price sponsored the move that took out the first internal structure high. All right? And now, this low now produced this high. Now, this high cannot be confirmed just yet as a lower high until price comes back down, trickles back down to take out this major structure low here. And as you can see, the major structure low here was taken out. All right? It was taken out by the move down. And therefore, this becomes your lower high in the market. Okay, this becomes your lower high. This is not your lower high, guys. Sorry, guys. This is your lower high in the market. Let me say something. This is your low and this is your high. Why is this your low? Let me repeat. It is because it sponsored this move that took out the first internal structure high in the case of a downtrend. And why is this your lower high? Because this lower high sponsored the move that came back down to take out this major structure low and close below it. All right, that's why it is a high. Now, everything that happens in between this your high and low is immaterial, it's noise. All right, can you not take trades from here? Yes, you can take trades, but you must know when you are taking trades from the internal structures, all right, you need to target the internal structure high or low as your take profit. All right, you don't need to hold it for too long, because the actual structure of the market is here. The major structure high is here, major structure low is here. All right, and therefore when people begin to look at this and say, well, this is a break of structure, they look at this and then they call this a break of structure, which is a break of structure nevertheless, but that's internal break of structure. All right, if you say that is a break of structure, then your OB maybe will be found somewhere here. I don't know. That will mean that for now, for this one point, you would have been taken into the market. But most of the time, your OB will be found somewhere, because they have told you that your high probability OB in the case of a bearish structure is found at the premium zone. And this is the premium zone. And so they will find an OB here and price will not tap into it. I just want you to understand that very well. And I'm going to show you all this on a live chart. All right. So this is your major high. And then it came down to break this major low here. All right, after breaking this major low, it printed this low here. Is this a valid low? Guys, look at it. Is it a valid low? Think about it. From what I've been telling you about, I've told you this is a mentorship content, but I've just decided to give it out for free, to share it with you for free. And I hope you will take advantage of this. All right, now this is your major structure low. Why is it? Because it went back up. It sponsored the move that went back up to take out this first internal structure high here. All right, I want you to understand that it went back up to take out this major, the internal structure high here. All right, so this becomes your major structure low here. This becomes your major structure low. Why is it your major structure low? Because this low sponsored this move that took out this first internal structure high, and then this becomes your major structure lower high. All right, this is your lower low and this is your lower high. Why is this your lower high? Because it sponsored this move that came down to take out this major structure low here. All right, that is how you map your structure in the market. Avoid the structural traps here. Avoid it completely. Avoid it completely. Please avoid it. Now, some guys will look at this and say, this is a break of structure here. This is a break of structure here. Okay? Actually, that is internal break of structure. And because the books tell you that after every break of structure, there is going to be an OB. So when you find a break of structure like that, then you find an OB sitting somewhere here, which is completely fine. But does price really move that way? No, it doesn't. Now, look at it. Price tap, came back down, tap on this retail OB, went back up momentarily. Why did it go back up momentarily? It is to induce more buyers into the market so that people will begin to stack their buy orders in the market. All right, they will begin to enter the market going long, whereas price is actually bearish, and therefore as they go, price turned back and started coming back down. Why? This was not a major structure high for it to be called a break of structure. Okay, let me tell you one secret about break of structure. And if you want me to do a video on that, I'm going to do a video on that for you. All right. Let me tell you one secret about break of structure. Your break of structure must always be in line with the prevailing market trend. Prevailing market trend. Now, the market is bearish. So what you want to be looking for is bearish, all right, break of structures at your major swing points. All right. So that is about that, guys. Now, let me quickly show you these things on the live chart so that you'll be able to understand what I mean. Okay. Now, take a look. Maybe we should start from here. Let me zoom in again a little. All right. So we start from here. As you can see, this is our low, major low. Okay. From what we have said, did this major low meet our condition for a major low? Think about it, guys. Does it meet our condition as a major low? Yes, of course. Why is it? Because this low, all right, now after this low, price took out the first internal structure high. I want you to always remember that one, guys. It took out the first internal structure high, which is here. All right, this is your first internal structure high. It took it out. When it took it out, okay, and printed this high. All right. Now, this is your valid low. So you can mark it out as your valid low, so that if price comes back down to take it out and close below it, this now will become a break of structure. All right. It will become your boss. Do you understand that, guys? Now, after that boss, where is your high? Well, this is the highest high after taking out this first internal structure low high. This is the highest high. Now, this high should become your lower high if it sponsors a move, the move that comes back down to take out this major structure low here and close below it. And as you can see, that has happened here. And therefore, this now becomes your major lower high in this case. This becomes your major lower high. All right. And I want you to pay attention to these things, guys. This is very crucial if you want to become consistently profitable in the market. So that's your high. This is your low and this is your lower high. This is your lower low, lower high. Now, price has printed something here again. Okay. Price has printed a low here. Does it mean that this low is a valid low? Why is it a valid low? Well, as you can see, price has taken out the first internal structure high. I'm just showing you. All right. Now, this is your first internal structure high taken out, confirming this low as a valid low. This becomes your valid low, guys. I want you to understand that very, very well. This becomes your valid low. Now, because that is a valid low, why is it? It sponsored this move up that took out this first internal structure high. All right. And now, this now becomes this becomes, you put an horizontal line here waiting, because this is a major low, waiting for price to come and take out this major low and close below it, guys. If it doesn't close below it, it is not a break of structure. All right. Once it closes below it, it becomes a break of structure. All right. Now, we have identified our lower low. Where is our lower high? Now, our lower high will be the highest high after this low has been created, the highest high. And that highest high has to be confirmed by price coming back down to take out this major structure low here, for that high to be confirmed as a lower high. All right. Now, in this case, look at this. This is very interesting. As you can see, price has taken out that very low with a candle body close below. Now, take note of what is happening here. Price went back up, came back down, but they didn't take out this major structure low. Went back up again, came back down, they didn't take out this major structure low, and then went back up again and finally broke through. So where is the highest high here that will make it be your lower high? I don't know. I think this is the highest high. I want you to check it for yourself. Is this your highest high? I don't know, but let's see whether that is actually the highest high. Okay. I want to see. Just a minute, guys. I want to see whether that is the highest high. Okay. So correct is the highest high. Okay. So that means that this is your high, and then that becomes your lower high. All right. Why is it? It is because that is the high that sponsored this move that took out this major structure low here. All right. All this one was just simply noise in the market. As you can see, this is a range market. As you can see, this is what we call range. All right. Price was just ranging between these points. Can you see that? This was just a range, and so it doesn't really mean anything. But the real structure break happened here. All right. So this is the move, the high that sponsored this move that eventually broke the structure to the downside. Can you see that? So all this one is noise in the market. Where you should focus your attention on is this structure, the major structure point. Now, if price comes back up to take out this major structure high here, it therefore means this downtrend will be over. All right. I want you to understand that very well. And therefore, we move again. We look at this. This is a low. Is this really a valid low? Guys, look at it. Is this a valid low? Can you see it? Is it a valid low? Yes, of course. It is a valid low. Why is it? Because that low took out this major structure high. It sponsored the move that took out this major structure high. Can you see that? Very simple. It's simple for you to understand. All right. It took out that major structure. I mean, that internal structure high. This is your first internal structure high. All right. So after that internal structure high, price went up. All right. Now take a look. Remember, this is still our last lower high. If price takes out that lower high, it therefore means that something has taken place there. Let's draw this line out and let's see. Can you see that? That last significant lower high has been taken out by price. Can you see that? It has been taken out. And therefore, this downtrend now is about to change. We are now about to go bullish because this has taken out the last significant lower high. All right? That is why you need to understand this thing. And this becomes your chop. This is a change of character. This is what is known as chop in the market. All right? It took out that major structure, lower high, and close above it. All right? And now, we can now start looking at price. Okay? We can now start looking at price. Price printed this high. Okay? This is a high now. But can this high be confirmed as our new high? Yes, of course. Now, let's look at this high. There are two highs there. Which one is the highest high here? Let's see. Which is the highest high? Of course, this one is the highest high. This one here. So this becomes your higher high. This becomes your higher high. Why is it your higher high? Remember, the last lower high was here, was this line here. The last lower high was here, and now price has taken it out, all right, to form a new higher high. Why is this high a confirmed high? It is because price has taken out the first internal structure low. I want you to always remember that very, very well. All right, very important. Price has taken out the first internal structure low. Okay, now once it takes out, this high is confirmed as a valid high and has printed this low here. But this low cannot be confirmed just yet. Why is it? It is because price has to come and take out this our major structure high here for this low to be confirmed as a valid higher low. Okay, now price has it taken it out? Let's see. I want to be very, very sure of what we are doing. Let's see whether it happened. Okay, let's see first. This is your structure high here. Okay, that's your structure high. All right, I want you to understand that very, very well. That's your structure high. Now, as you can see, it took it out. It took it out with the candle body close. It closed above it. Can you see that? It closed above it. So this now becomes your higher low. I want you to understand it. I hope you understand what we are doing here. This becomes your higher low. Please take note of it. This becomes your higher low. So if price now comes back down, okay, to take out this low here, it therefore means we change again. We switch again from bullish to bearish. All right, this is your point of invalidation. I want you to understand that very well. Now, so price is now going higher. It has printed a new high. Is this high confirmed? No, it's not confirmed. Now, it printed all this high. It's not confirmed. Now, this is the high that is confirmed here now. Okay, this high is confirmed. Let me take this one out. Let me remove all these ones here so that it doesn't confuse us. Okay, now this high, is it a valid high? Well, for a high to be regarded as a valid high, it has to first take out the first internal structure low in the case of a bullish structure. And here is your first internal structure low. And as you can see, price has taken it out. And therefore, this becomes your high in the market. I hope you understand, guys. This becomes your high in the market. And then this becomes your major structure high until price rates this high. All right, we are waiting for price to come and rate this high. As you can see, we are waiting for price to come and rate this high, and that will become your boss in the market. Once price rates it, it will become your boss. Okay, now as you can see, this low sponsored this move that went back up to rate this high and then close above it. Can you see that? It closed above it. It really closed above it. Can you see that? It closed above it. Can you see? Now, after that, what happened? This low is now confirmed as a higher low. It's now confirmed as a higher low. All right? So this is our higher low now in the market. This is our higher low in the market. So what happens again? We want to look at where price has taken out. Now, this is a new high. Is this a confirmed high? Yes, of course, it is a confirmed high. Why is it a confirmed high? Because price has taken out the first internal structure low. All right. So this is confirmed as a new valid high. This, you are not concerned about everything that happens in between your high and your low. What you are concerned about is your major structure point. I'm talking in terms of mapping your structure in the market. I'm not talking in terms of taking your trades. I want you to understand that very well. So now this is your major high, and therefore if price now comes back up to take out this major high, then it will become a break of structure. And as you can see, price came back up, took out this major high with a wick and close below it. This is not regarded as a break of structure. All right, this is not our type of break of structure, okay, at RALLYTOP. Now, but as you can see, this high, this wick here, the high of this wick eventually was taken out by a candle body close, and once that happens, it confirms this very structure point here as a valid break of structure. Do you understand that? So this now becomes your high. Okay, this is your new high now. And so what are we looking for? We are looking for a break of structure. We are looking for the first internal structure high, low, to be taken out to confirm this high as a valid high. This high can only be confirmed as a valid high if it takes out the first internal structure low. And where is your first internal structure low? Here. It is here, guys. This is your first internal structure low. So we want that low to be rated before this high can be confirmed as a valid high. And as you can see, price took out that high, all right, created another structure point, another structure high here, all right. So therefore, this is your first internal structure low is moved from here, is transferred from here to the next structure, first internal structure low, all right. And this is your first internal structure low, guys. If you don't understand what we are doing, then maybe you need to go back over this video again, or join our VIP community to learn more of this. All right. So therefore, this high now becomes a valid high. All right. Why is it? It is because it has taken out the first internal structure low in this case. So we can mark this high as a valid high. All right. We can mark it as a valid high, but we need to pay attention again here that this could be a minor internal structure low. Maybe we are going to still have a major internal structure low. I don't know, but you need to see how price plays out here for you to be able to determine that. All right. If you don't understand, again, I said you can avail yourself of the opportunity at our VIP community to learn more about these things. All right. We are bringing in another services, one other service that we render. It is known as VIP membership. You can join the VIP membership. You don't necessarily need to join our mentorship, our private course. You can join our VIP membership. All right, with a little token every month. You can join that VIP membership and learn some of these things there. Even though we are not going to be teaching our core content, all right, our core concept at the VIP membership. It is for those, for the traders who have gained some experience and they just need help to be able to enter the market and make some profits in the market. It's going to be like a signal service. It's not actually a signal service. Please don't get me wrong. It is not actually a signal service, but we are going to be giving you trades on the 1 minute time frame where you can enter your trade and make profit from there. All right, because the money you will be paying every month, you need to recoup your money and then make profit on top of that money. All right, is going to be very cheap, so you can avail yourself. We are starting by May this year. You can avail yourself of that. You can also avail yourself of our private mentorship course. All right, you can avail yourself of that too, and you can also purchase our full mentorship video content, full, and study on your own. That means that you are not going to be mentored. You just buy the full mentorship videos and study on your own, or you buy our ebook. You can purchase our ebook, all right, and then study on your own from that ebook. All right, so there are multiple opportunities for you to learn. Okay, take advantage of any of them. I'm going to leave something in the description below concerning this, our services, so that you can take advantage of it. All right, now, like I said, you need to look at how market is developing here for you to be able to know exactly what to do. Okay, but now at this point, this is Asian high and this is Asian low. You know that both the Asian high and lows are huge liquidity zones, so you need to be very careful about the way you want to handle price action here. All right, but at any rate, this is where we are in this video. Sorry guys, I hope this helps you to understand some of our core concepts at our VIP community. If you have any questions, please don't hesitate to drop it in the comment section, and I will do well to answer your question. Now, if this is the first time watching this video on this channel, please make sure that you subscribe. Make sure you just hit that subscription button now and become a part of the move here. All right, and turn on the notification bell so that anytime we bring out a new video like this, or we publish a new video, you'll be notified about it. Please, if you like the content of this video, give us a thumbs up. We need it. Please help us. That is the least you can do for us. Okay, we spend a lot of resources to publish a video like this, to make a video like this. Please give us a thumbs up, and then we'll be very glad about it. Okay, remember, our 4 services are still on. Number 1, our private mentorship course is still on. You can take advantage of that. 2, we have a VIP membership that is coming up starting from May, all right, at a very, very little fee that you will be paying monthly, but the benefit you will get will be more than what you are paying. Okay, number 3, if you want to purchase our complete mentorship video content, you are free to do that. That means that you are going to learn or study on your own. We are not going to be your mentors. All right, number 4, you can also purchase our ebook. All these packages will come up by the first week of May 2023. All right guys, I see you in our next educational video.